Hey everyone, we are trying yet another uh, YouTube live for the first time. Not something we do often, but we are going to do our best to get you another live update on kind of going through what the market has done on another Monday, another wild Monday with a whole bunch of swings going on. Here to join me to talk about all those swings is MarketBeat analyst Chris Markoch. Chris, thank you so much for your time today. There is a lot to cover and a lot going on today, and I think I want to start out by just looking at the not so great map, the heat
Right.
map that we've kind of become accustomed to. We've seen this more times than not recently. Once I get there, let me see if I actually can get there. But
Sure.
there's so much going on with every stock kind of ending the day in red, but at least ending it less red than we did just a little while ago.
Right.
Here's a look at that heat map finally.
Right.
So again, almost every industry in red of some kind today. Um, go through a breakdown of what happened in the market and how much we saw of a dip in the market today.
So at one point this morning and even later on in the afternoon, the Dow was down over 1,000 points, over 1,200 points, rallied a little bit to close out the day. So it ended just under 1,000 points, somewhere in the 900s. I don't exactly remember what the exact number was, but I think the heat map is really interesting, Bridget, because on Friday, the Dow took a, or excuse me, on Thursday, not on Friday, Thursday, the Dow took a pretty significant plunge, but most of that was due to United Health. And a lot of investors remember that United Health was like weighing down the entire Dow components. Today, you can see on the heat map, it's a much broader sellout. Everything was red on the Dow. And that was probably a little bit more concerning for investors. The conventional wisdom is a lot of this is just due to, again, it's the uncertainty over the trade wars, and there's just an anxiety brewing about when is that first trade deal going to be announced? How long is that going to take? What is that going to look like? And so the investors can start kind of feeling their way around.
And I think that's what's happening right now is people are
Mhm.
still learning to navigate this new normal
Right.
of kind of continued volatility. It's the name of the game. This 3% drop is something we've seen time and time again over the last couple of weeks that it's starting to get a little familiar. I don't know about you, but I just felt like there was overall less of a sense of panic today because this isn't the first time we've been through this.
I would agree with that. I think some investors were probably expecting it. Again, there was some anticipation coming into the weekend that we were going to see a trade deal announced sometime over the weekend, and we didn't see that. So I think investors then were, the futures already last night were turning negative. So I think there was some belief among investors that the market was going to be red today. And I think it's important for investors to remember we see something like a 1,000 point drop on the Dow, and that's not insignificant, but it's $1,000 off of a Dow that's trading at around 38,000, as opposed to maybe you would see a 500 point drop in 1987 on a Dow that was only at 1,500. And so, from a percentage standpoint, this is not as significant as that, which doesn't mean that it's not upsetting to investors to see their portfolio go down. But in the bigger picture, it's not that big of a percentage move, but it is a big move, you know, on a dollar. It still means dollars coming out of portfolios.
Yeah, absolutely. There's real money being
Yeah.
lost. There's real dollars coming out of portfolios.
Right.
And I think it's especially concerning for those who are already in their retirement, counting
Yes.
on the number in that portfolio to get them through. And I think that it kind of depends on where you're at in your investing journey as to how much panic and how much fear you have coming with all these market swings. And it's not just portfolios that are seeing and the stock market that's seeing an impact right now. Several different markets are reacting, and we're going to
Right.
get to those too and also talk about kind of what investors can do when there's this much volatility. But before we dive into all of the how to manage the chaos conversation, let's just go through some more of the chaos that's happening right now. Let's talk
Sure.
about the US dollar. This
Yeah.
market is also kind of tanking right now.
Yeah, so for a long time, U.S. stocks have been the best game in town, and they've been going up very much, which means equities were going up over 20% in the last couple of years, and the dollar was rising along with it. So we had a strong dollar, we had strong rally in stocks, and now you're not seeing that. You're seeing stocks selling off, and you're seeing the dollar selling off, but you're also seeing bond yields go up, which means people are selling bonds. And that is suggesting that there's a flight to other safe haven assets other than the dollar. And one of those, you know what I'm going to say, is gold.
Yeah, absolutely. There's a lot going on in the gold market. You had
Right?
an article for MarketBeat about that too.
Yeah.
So let's talk about the move to gold. That's happened. It's been happening for a while. We
Right.
saw right after the election in November,
Mhm.
the gold market did kind of take a dip, but
Yeah.
then it really came right back and it continues to be very strong, it seems.
Well, I think a lot of people, when Donald Trump was elected in November, I think a lot of people were very confident, I should say, that we were going to get inflation quickly under control. The markets were going to rally. We were going to see lower taxes. We were going to see less regulation, and all of those things were going to happen. And it isn't going to happen as fast as investors wanted to see it happen. I believe there will be a tax bill passed, hopefully earlier than later, but I believe it'll be passed sometime in 2024. You are already seeing regulations get cut, but now we've thrown this tariff situation and this trade war into the mix. And so there's just a lot of uncertainty. And ever since probably about February, that means that you've got a lot more investors starting to take a hard look at gold, because gold is the asset that you look at not necessarily as an inflation hedge, but when you're concerned about inflation going significantly higher. And that's where some investors are at right now, because again, we just don't know what the tariff situation is going to be.
Yeah, that uncertainty is really impacting everything right now. And
Yeah.
gold is that flight to safety, like you
Yep.
said. I know some investors, especially the retail investors that we normally have on our channel, aren't that interested in gold. A lot of retail investors are kind of
Right.
staying away. Either you're in gold or you're not in gold. Are we
Mhm.
starting to see some move from those retail investors who are kind of stock market purists trying to diversify into these other markets?
I think so. And again, I think there's a lot of investors that are they're ambivalent towards investing in physical gold, because physical gold comes with its own quirks. You have to have a way of storing the gold in a secure fashion. You have to, and that comes at a cost. And there's some ambivalence about, okay, if I have it, how do I sell it, and all of those things. So I'm not saying that physical gold is the right choice for most investors, but you can buy gold through an ETF. You could also buy gold mining stocks. And right now, that seems to be where a lot of the upside is, according to analysts. At a certain point, it's not profitable for these miners to explore for gold. But with gold hitting record highs now pretty much every week, if not every day, that's becoming a very profitable option for these mining companies, who are probably going to start drilling a lot more aggressively. And investors are expecting that the price of mining stocks will go up significantly from where they are right now. And that was the focus of my article last week, about a few names that investors might want to look at when it comes to those mining stocks.
Yeah, let's talk about some of those names just to go over them again. For retail investors, if gold isn't your thing,
Right.
but you're maybe thinking that's a safer bet right now because it is the market that is continuously growing through all of
Right.
this uncertainty. These picks that Chris has are kind of more of those safe way to get into gold, but still be in the stock market if that's more of what your comfort zone is. So, Chris, go ahead and share the first of those three different stocks that you mentioned to be in the gold investment area anyway.
Right. So one of them is Newmont Mining. NEM is the ticker symbol, and it's the largest gold miner in the world. And it seems to me it's like a pretty obvious play for investors right now. Um, they have they have several very asset-rich mines that they're exploring in. It's really just probably the safest bet you can have right now for as far as investors looking to get into the gold play.
All right, so Newmont was your first one. Let's
Yep.
go into the second one and I'll pull up that chart too.
Please.
I see I can share the screen pretty quickly here. Uh,
Sure.
So what about your next pick is Freeport? Talk about that one a little bit.
Yeah, Freeport McMoran. So, if you want to look at Freeport, Freeport is not so much a pure play on gold, and some investors would probably push back on me on that a little bit. But where Freeport does have some gold mining activity, but where they're also really excelling in is copper. And copper's been slumping lately, but a lot of analysts believe it's just a matter of time before copper is going to swing in the opposite direction because we just need a lot of copper. And it's not just for the AI trade, it's for everything from EVs to solar panels to a lot of the things that are going to be fueling the new economy are going to require copper. And we're onshoring a lot of companies right now, and they're going to require buildings to be built and copper wire and all of that. So I think Freeport's not only a play on gold, but it's also a play on the eventual need for copper that's going to be coming up.
Yeah, that's very interesting. And you look at the stock chart for Freeport too, it's
Yeah.
it's seeing the volatility like any other
Yes.
stock is right now, but it is finishing the day a little higher than maybe the
Yeah.
rest of the market is.
Yeah.
Yeah.
It's again, that's just it's a play on not just the gold mining, but it's also a play on copper. And again, it's going to get a lift when all the gold mining stocks go up. Freeport's going to go up with that as well.
Now, when you say all the gold mining stocks, let's talk about your third pick for this topic. And this is one you've talked about on the channel a few times before.
Yeah. Um, Hold on just one second, Bridget.
The
We're
very,
doing we're doing this live, folks.
yes. I'm going to share the chart right now for your third pick, the Barrick Gold pick.
Oh, Barrick Gold. Yeah. Okay. Um, so Barrick falls in that category right with Newmont. And sorry, Bridget, I just had to refresh my memory. I thought Barrick was my last one. I wasn't quite sure, and I didn't want to go say it. So yeah, Barrick's my third pick. It's right there with Newmont. Again, I think Barrick might be the second or the third largest miner. Again, quality gold mining assets. They pay a good dividend. They're a solid choice again, and you can look at the chart today. And again, following that pattern you just saw with Freeport, it's up again today, and that's because again, a lot of investors are getting the message gold mining stocks are a good way to get exposure to gold without necessarily holding the physical metal.
Yeah, and I think that these charts show if you're looking to follow the opposite of what the volatility is doing, as the market crashes, these stocks seem to go up. And as the market goes up, these stocks seem to go down, like we saw kind of in that December timeframe when
Right.
gold was starting to go down. So it's just good to have some diversity in your picks so that not every stock you own might be going down at the same time. And I think
Correct.
that's the hardest hit for a lot of investors when it's not just one or two stocks, but that whole heat map is all
Right.
red. It's hard to have every stock in your portfolio losing something at the same time.
Right. But I think the gold mining stocks are they're a good reminder to investors that even on days when you see a heat map that's as red as that is, there are still some winners. There are still some winners that you can look at. You just really have to be selective right now. Netflix, for example, on that heat map, Netflix was like the one little green spot in the sea of red was Netflix. Netflix is going it's up over $1,000 a share right now. It's been popping after its earnings report. Again, it's clearly shown that it's the winner in streaming, and their earnings report last week showed that there's no signs of that slowing down anytime soon.
Yeah, Netflix has been on a couple of our recent stock list picks because,
Yes.
like you said, even in volatile times, even in a down economy, Netflix is pretty stable through all of the volatility. So it's
Right.
a good, more stable pick to have. For those of you who are watching right now, I so appreciate you joining us on our live stream and bearing with us as we're learning this new way to be on YouTube. We love trying out new things, and this live stream one is fun. It lets us get to know you a little bit more. Thanks for those of you who commented. It's great to see you joining us as we're live. Let us know what you think. What are some of your stocks that are safer choices to try to make it through some of this volatility? I know Chris is going to share some more options. We'd love to hear what you're doing? What are some of your kind of safer choices in the middle of these major market moves that we just keep seeing week after week, day after day in the market? Let us know some of your tips and some of the favorite stocks that you're doing that are maybe the safer choices right now. And maybe it's not stocks. Chris, let's talk a little bit about some other moves that investors have been making. The bond market, we've been talking about that in some
Right.
ways. There's other moves that investors are making to handle and manage all of this volatility.
Right. And for some investors, that means they're going to cash, and there's not necessarily anything wrong with that, except again, there's the caveat there that you can't really time the market. Timing the market is hard. And when it turns, it usually turns very quickly and without, it doesn't give any notice. And so if you're not in the market when it turns, you're going to miss out on some of those biggest gains. But there are some other ways that you can play it. One thing that's been happening now is you've been seeing a shift towards dividend stocks. And it's not necessarily that those dividend stocks have been outperforming the market. Some of them may be less bad, but it's not that they're turning in a lot of heavy gains. In fact, some of them from a stock price from a stock price perspective may be down for the year. But when you're looking at quality dividend players, and especially those that have high yield dividends, investors have to remember that they're at least getting paid something for holding on to the stock in the interim. So you're looking at here, you could be looking at companies like Chevron, and Pepsi and Coke and Procter and Gamble. These are just blue chip companies. You're never going to really have to worry about these companies with their revenue and their earnings. They're going to be profitable, and they have a history and a tradition of delivering shareholder value, both in terms of solid dividends. In some of these companies, do it in way of share buybacks as well, and that's a that's a good reason to own the stocks again. Similar to this statement you were making about gold, Bridget, this is where dividend stocks shine. It's not necessarily because they're going to beat the market, although a lot of these are less bad than some of the other picks. But it's because, again, even if they're not delivering world beating gains in terms of your stock portfolio, you're getting paid for just holding on to these stocks. You collect that dividend, which you can reinvest, or for some investors who are at or near retirement age, they can be taking those dividends and use those as supplemental income to pay for some other expenses.
Yeah, we've been working on a video here at MarketBeat. It's an evergreen video, we call it, something that you can get information on anytime. And it's all about how to use dividends to really
Yeah.
double, triple your profits, to reinvest those and really build true wealth over time through dividends. So that video is coming out later this week. Stay tuned for that one. We'll have that one on the channel too. But I want to get back to some of the questions we have coming in, and that's getting back to gold really quick.
Sure.
John wants to know about investing in gold ETFs. Kind of how that can work for investing in gold as well. And some specific ones looking at GLD or IAU for gold ETFs. Just kind of give us the pros and cons of maybe choosing a gold ETF versus trying to pick specific gold stocks.
Sure. So, you know, ETFs are a popular choice because ETFs trade a lot like stocks, but you don't get the risk that's associated necessarily with owning that individual stock. So you're trading in terms of a basket of assets instead of just one particular asset. One of the things that you need to be careful of when it relates to gold ETFs is what is the ETF actually investing in? Because one of the things that goes along with an ETF, and I remember we had an analyst. She doesn't work at MarketBeat anymore, or she doesn't work for MarketBeat anymore, but she used to say, with an ETF, you have to take the trash along with the treasure. So you have to be careful with an ETF that you know what the holdings of the ETF are, so you know what you're buying. You mentioned the GLD ETF. That, for example, and I can share my screen with you on that one. And so you see, it's the only thing that ETF is holding is actual gold. So that's the only holding in the fund is actual gold. Now, the difference is an investor's not holding physical gold. So I guess the best way I could talk about this is it's sort of like saying somebody owns cryptocurrency on an exchange like Coinbase, but they don't own that cryptocurrency in a wallet, in a cold wallet or something. So it's not their it's they don't have the cryptocurrency in their possession. It's sort of similar to a gold ETF. You're buying gold, but you're not actually physically owning it. There would be some concerns there that could you actually, if you had to cash it out, could you get the gold at the same price that somebody might get it at if they had the physical gold? But your trade-off there is you're getting the liquidity of an ETF. So, people can get in and out of gold more easily, and they're not going to have the risks associated with gold as far as the ones I mentioned before about you have to store the physical metal, you possibly have to insure the physical metal, and those are the reasons why some people would say the ETF is better, even if really I'm not owning the physical gold, I don't have it in my physical possession. But the trade-off is if I want to sell it, it's just like selling shares and I can be in and out of the trade pretty quickly.
Yeah, absolutely. John also added that he is invested in the iShares Gold Trust or
Okay.
IAUM. That
Okay.
chart's very interesting because it's got the kind of movement that people want to see right now, which is that upward movement.
Oh,
Uh,
absolutely.
and
Yeah.
seems like a really good choice out there, John. Thank you so much for sharing that one.
Yeah.
Another person shared, let me find the other one up here. We had another person commenting saying that they are in BHP Group, which this one is interesting. This one's out of Australia. So it gives you some of that international diversification as well, which we've
Uh-huh.
talked about a few times too as being important. That one doesn't have as much of the steady upward movement, but it's finishing today ahead of where the rest of the market has, that's for sure.
Yeah, and I was just looking at BHP Group, and one of the things that's kind of nice about that one is that it's got a fairly attractive dividend too. It's the dividend yield on that is over 4%, so that's not a bad choice either.
Yeah, dividend yield is another big thing to look at. And
Hmm.
like I said, we've been working on a video we're going to get out all about dividends from investing, which is something MarketBeat is very
Right.
passionate about. In fact, if you're a regular user of MarketBeat, you know we have a whole bunch of tools out there that are really helpful. Maybe you can pull up the dividend calculator really quick, Chris, or the
Sure.
dividend yield calculator. These are totally free tools that anyone can use to figure out that dividend to, like Chris said, be able to really take advantage of at least having some income coming in right now. Even if the stock price or the value of the stock goes down, you're still going to get that dividend coming in that you can then reinvest. Like you said, it's the safer play during a volatile market like we are seeing right now, where
Hmm.
we continue to have these 3% swings like it's no big deal happening kind of all the time.
Yeah, here's the dividend calculator. Again, this is a free tool on MarketBeat. You find it under research tools. It's right there, dividend calculator. Again, you can choose what you're looking at, whether you're looking at an individual stock, how frequent are the dividends that you're looking for? Are you looking for monthly dividends? Drip means again, do they have a um, do they have a policy that allows you to reinvest your dividends? Most companies do, some don't. And then again, just the things. What's your starting principal? How much do you figure that you're annually going to be contributing to the stock? The numbers in here are just the default numbers. What the dividend tax rate is, and expected annual share price, and all those things. And so you can figure that out for whatever stocks or ETFs you're looking for, and it'll give you a calculation for what your ending balance will be over that time, your total return, your average annual return, and all those things. So it's a nice tool again for investors who want to kind of take the wheel themselves and kind of be a DIYer in terms of that. And it's a really helpful tool to help you understand how those dividends can grow over time.
Yeah, we'll make sure to put that link in the comments section too
Yeah,
once this video posts so that you guys can reach that really easily if you want to. All right, we've talked a lot about gold, we've talked a lot about dividends. I want to
yeah,
talk about the other big players that are seeing a lot of movement right now, maybe not the safest choices because they are moving so much, and that's the big tech stocks, the
yeah,
Mag 7 giants. They saw some of the biggest moves today. Nvidia at one point was down over 6%, I think maybe almost down to 8% today, 8%
right.
down. Talk about what the big tech stocks are doing during this volatility and why they're getting hit so hard.
Well, I think there's a few reasons, and I think there's not. I think the answer that might apply to all the Mag 7 stocks is simply the fact that they were up so much that that's where institutional investors can take profits fast. So if you're looking to cash out of a stock and raise cash for your investors, those are the stocks you can get it out of because they were up so much. That's where you're going to take the profit out of. Now, when you start getting more granular and you start looking at these stocks individually, there are different reasons for different stocks. I mean, Apple, certainly there are tariff concerns with Apple. What happens? Yes, we've had a pause with kind of a wink and a nod that their cell phones are going to be protected, but what if they're not? What if that eventually doesn't come to pass? Is Apple really safe from tariffs? We don't really know. Microsoft seems to be safe from tariffs, but now they're just this morning, their antitrust suit kicked off. So now they're in the news for kind of the wrong reasons. And then you had Meta, where Zuckerberg was in court last week, and it was another regulatory issue. So you've got Alphabet is there's investors who are concerned that although they're still the leader in search, there's concerns that maybe the overall search market is going to be going down because of generative AI. So it seems like each one of the Mag 7 have individual things that investors are considering, but from a broad standpoint, again, a lot of it's just because they were up so much and that's where investors can take profit and that's what they're doing.
I think that's a really good point that there's multiple factors, and one of
Yep.
them is just the overall S&P 500 is going down.
Yep.
These Mag 7 have such a big part of
Yeah,
the S&P
absolutely.
500. Of course, they're going to go down with it. All of those individual factors you mentioned are really, really interesting. And I kind of wanted to hear your thoughts on in a market like this, where you have the reactivity to every different headline, every different tweet. Don't worry, we're not going to forget about the tweet that's this morning that kind of sparked the sell-off a
Yeah,
little bit. We'll talk about that in a little bit.
that's
But
true. I forgot. I didn't even mention that one, Brady. Yes, you're right.
we didn't even talk about that yet, but we will.
Yeah,
But I just want to talk about there's so many things the market
right.
can react to. Are individual stocks actually still reacting to, like you said, bad headlines about the specific company, or maybe it's a good earnings report that happens? Are we still seeing any kind of market trends that are, is there any individual news that's enough to kind of go the
Hmm.
opposite of what the market trend is?
I think so. I mean, we're now getting into the heart of earnings season. Earnings season's now going to be a lot fast paced now. This is one of the biggest weeks now of earnings, and then next week we start hearing some of the other. I think Alphabet might report this week, but then next week a lot more of the Mag 7 start to report. And then you're going to get retail after that. You're going to get a lot of these others, a cadence to earnings season. And we're really starting to get into the meat of this earnings season. I think that's going to be a fascinating thing to see because you saw that bank stocks largely reported good earnings, but a lot of bank stocks didn't necessarily get the bump that they were expecting. And again, I think it's just overall because a lot of investors believe these stocks are priced to perfection. And so, unless you deliver a grand slam of an earnings report, they're not going to be that impressed. And I do wonder if we're going to start seeing that as where it's not going to be enough for a company just to deliver good news. They're going to have to deliver news that just blows the market away for them to get a lift, somewhat like Netflix did.
Yeah, and I think that that really speaks to the uncertainty that's
Right.
happening in the market right now. You have to completely prove that you're a sure thing in a market
Right.
where nothing feels like a sure thing. And I
Yeah.
think that bar, that threshold is almost too high for any company to find success in doing that. Let's talk a little bit more about the volatility now.
Mhm.
Talk about the tweets, the tariff moves. We know everyone knows that the tariff announcements
Yeah.
have been leading to kind of the start of this
Right.
intense volatility. But now Jerome Powell is the next topic to talk about.
Right.
Let's talk about this feud and how it's kind of fueling even more uncertainty in the market.
Right. So let me start by saying something that some investors will probably not want to hear. And that is that, believe it or not, this dispute between Trump and Powell is not the first time that a US president has had a dispute the with the Federal Reserve chair. This goes back to at least the Truman administration, and certainly Lyndon Johnson had some problems with his Fed chair, and Nixon didn't exactly like his Fed chairman either. So, as long as there's been this relationship, there's been this adversarial relationship between the Fed, which is, let's just charitably say, they're supposed to be nonpartisan, and the president, which certainly the president has an agenda, and normally the president would prefer to have lower interest rates or as low interest rates as possible. So let me just start by saying that. Now, the specific news of the day is that obviously Trump is doing things as he tends to do and talks in language that many investors would maybe prefer he not use, like calling Powell a loser and somebody who's always behind the curve and all that stuff. But the general thought is there's concerns that Trump is going to make a move to fire Jerome Powell, which would be seen as very negative to the markets. Do I think that that's going to happen? No. Can I say with absolute certainty it's not going to happen? No. That's what you're going to get. If that's part of the Trump presidency, there's just a lot of stuff that you just can't say absolutely 0% chance of happening. Do I think it's going to happen? No, I don't. It's but again, and the reason why I say that again is I go back and say history didn't start with Donald Trump. There's been a long history of presidents that don't get along with their Federal Reserve chairman, and that's just the nature of the relationship. The president always wants to have a policy that's going to be favorable to the consumer and businesses, and the Fed doesn't necessarily see it that way.
Yeah, I think, like you said, there is just so much volatility right now. And I think
Yeah.
that the market, this is one of those, just another one that to expect during this presidency of
Yep.
you can't say for sure, yes or no,
Yep.
one way or
Absolutely.
another. And I want to get back to some of the comments we have
Sure.
coming in. I love this one perspective of I'm tired of all of this movement. I'm just ready to get out right now. And I think that
Yeah.
that is that's a feeling that a lot of investors share, and that's why
Sure.
you're seeing more of that move to cash. People are like, I don't want to ride these waves anymore. I would rather just stay out until we have some level of certainty. But do you think that we're going to get there anytime soon?
So I'm gonna I'm gonna hedge my answer here, Bridget, because first of all, again, at MarketBeat, we don't give neither Thomas nor I nor Gabriel, we don't give specific investment advice. You need to go to talk to your own investment advisors before that happens. What I will say is there's a long history in the stock market that shows over time the trend is always up. I believe we're going to get there again. We're going to get to more stable times. Can I say when that's going to happen? I absolutely cannot. I suspect that it could be happening towards the back half of this year, especially if the trade war quiets down. If we start hearing that there are deals in place with other countries, and that businesses get a lot more clarity on what the rules of the road are going forward. Because again, ultimately what drives stock price performance is going to be good earnings, and companies need to know what their earnings are going to be. Analysts need to be able to trust the numbers that companies give them regarding those earnings, and if we get back to that environment, I think that's going to be favorable for stocks. But you're not going to see that this quarter in earnings, and it might be another quarter or two before you see that. Having said that, just like I started, Bridget, we can't give out specific financial advice. I'm not going to tell investors how to feel about the market. I'm just going to say, I think over time, if you're looking right now at saying, look for the best in class names, look for the companies that you know are going to be there when you need them, and it's okay to say you're in the stock today. It doesn't mean you're in the stock forever, but you got to look for the places that are safe to hide out in right now. And there are names that are like that. And I'm not just talking about a name like Netflix. We talked about earlier. Coca-Cola is having a really good year right now. Hershey's is having a really good year despite high chocolate prices. They're still having a good year right now. So there are places to hide out. You just have to be willing to look for them a little bit more. And they might be names that you might otherwise be turning your nose up at when all you had to do was throw a dart at an AI stock and you were probably going to see your portfolio go up by 10% or more.
I think the last couple of years of that AI boom have been
Yes,
kind of the heyday for retail investors, where
correct.
everyone is excited about those AI names. But right now, it's not the safest place to be.
Right,
Not to say there aren't profits to be made there. There likely are, but it's the area seeing the most volatility right now.
right.
That area and one other. TC, so appreciate your comments and thanks for joining us again, like you always do. But he wants to hear about it. He brought up a really good point in the
Mhm.
comments, and that's Tesla.
Oh,
Uh,
yeah.
Tomorrow, earnings, it's going to be an interesting one for sure. This stock
Right.
has more volatility than any other stock in the market right now, it feels.
Yeah, and I suspect, again, this is just my guess. I would suspect that Tesla is going to deliver an earnings report that's not going to be very good. However, I do think that most of that bad news is probably already priced into Tesla stock, which has gotten whacked pretty hard this year. Um, again, the story here with Tesla is going to come down to Elon Musk and a lot of investors just feeling like Elon's not minding the store anymore, that he's all swept up in Washington, D.C. and Doge and SpaceX. And, you've got a lot of Tesla shareholders that are saying, hey, what about us? What about this company? Um, I don't know how to answer that. I know it's starting to frustrate even a lot of the big institutional investors. Maybe we'll hear more from Elon tomorrow. I would still say you can expect a lot more volatility here. But again, the fundamental question that investors have to ask themselves with Tesla is, are you investing in a car company or are you investing in something that's much bigger than a car company? Um, I can't answer that for them. They have to answer them for themselves. If they're investing in just a car company, yeah, Tesla's expensive right now. If they're investing in something that's more than a car company, then you might be getting a stock at fire sale prices. But again, that's just something that every investor has to figure out for themselves.
Yeah, interesting point. And I agree. If we hear from Elon tomorrow, depending on what he has to say or what he has to
Yeah,
share about the company, like you said, more announcements that come out about maybe new research developments, maybe new product launches
right.
could potentially move the needle on the stock. But I think you're right. The volatility is going to stay for a
Yeah.
while in this stock.
I don't see right now any path that doesn't make this stock very volatile because right now, again, in the very short term, even if you think that Tesla is more than a car company, it's still going to be all about the EV performance right now. And right now, they're suffering just as much as a lot of other car companies are suffering.
Very true. Lots of tariff moves for every car company out there. And thank you, Chris, for sharing some of the
Yeah,
safer buys to look at right now for investors. I think we're pretty much coming to a close in our discussion. We've talked about so much today. Be sure to check out some of their other videos. We have videos we've done recently talking about Tesla's future and why some investors view it as much more than a car company. We've talked about some of the chip stocks. We'll have another one coming out on chip stocks tomorrow. So make sure to stay tuned to our channel. Check out some of our other content. Again, this is only our second live we tried on MarketBeat, so we're still learning this platform. We love hearing from you and hearing your comments. We're going to try to do this maybe on Mondays at market close a couple of times a month. And if you guys really like it, maybe we'll do it more often than that too, and hopefully get more used to this platform too.
yeah.
Thanks for joining us, everyone. And as always, happy investing.